And I think it's going to start this year. I think the big surprise is that real assets, and I'm not talking about real estate now, but real assets, commodity assets, they're going to catch a bid unseen ever before, because you're going to see the Western currencies begin to debase drastically. And I do think that 2024 is, it's a line in the sand, if you will.
I'm going to share the Federal Reserve. This is off the St. Louis Fed's website. It's a chart of the money supply, M2 they call it. And so the wide gray bar kind of to the right of center there is the 2007 to 2009 recession. And you see that little bump in the money supply that they cranked out to bail out the banks. Remember, it was supposed to be 400 billion. Oops, 800 billion. Oops, okay, 1.6 trillion or 16 trillion when you finally figure out what the final tab was, including international swaps and all this crazy stuff. But now that was a little speed bump in the road compared to now. Look over on the right side of the chart and tell us what you see there.
Well, to the far right is what we've been talking about for the last year and a half. The money supply is actually declining. And if you go back, I mean, Donegan, you could go back to 1913 when the Fed first started. And the only time you'll see a drop, a prolonged drop in money supply like that was during the Depression, the Great Depression of the 1930s.
And when you were talking about nothing's been solved and everything's actually worse now, and the efforts that they're having to make are having to be bigger, what I was alluding to in this chart was that the size of the bump of the increase in the money supply during the 2007-2009 global financial crisis, if you look at that minor bump in the middle of the chart versus the hockey stick vertical line that's, who knows, 10 times taller that they just pulled off in the last 3 years here, as you say, the emergency measures are having to become more and more extreme.
Well, Donegan, the Fed's balance sheet went from 900 billion to 9 trillion. It's up tenfold is what the Fed's balance sheet has grown. And this past year, they lost, $113 billion? And I don't know what their equity was going into 2023, but I think in 2021 or 2022, they had $65 billion of equity. So you're looking at a central bank with a negative equity position as it stands right now. And that's the same with the ECB, the Bank of Japan, the Bank of England. It's true with all these central banks because interest rates have risen and their holdings, the credit, the debt, the bonds that they hold have declined drastically because interest rates did nothing but rise for the most part of 2023. So you've got central banks that are technically insolvent, and the balance sheet of the Fed is 10 times larger than what it was, back in 2008 when the first bomb blew up.
Circling back then to your original thesis that got us into this rabbit hole of the debt, which is absolutely crucial, was that this false appearance of prosperity, or when any indicators that the officialdom have been pointing to saying the economy is strong, have been bought at the cost of overwhelming expansion of the debt. It's simply living off of credit cards. I mean, any household could do that. Any of us could take our credit cards, go out, max out our credit cards and say, look, I got this new wardrobe and I got this new cars and I'm going on a vacation and I just bought this new bottle of Dom Perignon. Life is good, obviously, right? Everything's strong. Life is good because look at all this stuff I'm being able to buy. But it's all being bought off of tomorrow's dollars. And can you share with us any statistics about the efficiency of that as far as actually stimulating the real economy, or versus, every dollar added to the debt versus dollar expansion in the GDP that's accomplished because of that?
Well, I mean, obviously it does stimulate the real economy. If you buy a car, you bought a car, and Ford, General Motors, Chrysler, Toyota, whatever, that's a car that they sold and they made profit. I mean, and it's like that with anything, with homes, with vacations, whatever. So yeah, it does stimulate the economy, but the average person can only do that so long because we don't have the ability to print money. The government can do it because they can print the dollars to make the payment. The only problem is when all is said and done, that blows up the currency, it devalues the currency, and that currency ultimately goes to zero. And that's where the dollar is, and all fiat currencies are ultimately going. They're going to zero, which means a cup of coffee and anything else becomes infinity. And I think that's going to be the big surprise. And I think it's going to start this year. I think the big surprise is that real assets, and I'm not talking about real estate now, but real assets, commodity assets, they're going to catch a bid unseen ever before, because you're going to see the Western currencies begin to debase drastically. And I do think that 2024 is, it's a line in the sand, if you will. And I say that because we have an election coming up in November. And I'm at the point now where I give the odds of us actually having an election at less than 50-50, because I don't believe that the powers that are in place now are going to be able to cheat enough to win the election. And I mean, here in the U.S., if Trump wins, if it is a red wave, and they do follow through on what they've talked about, a return to the rule of law, you're going to see a lot of people go to jail. And I think they understand this. So I fully expect some type of huge event, whether it be real or more than likely a false flag, to literally kick the table over and prevent having elections later this year. And obviously, if that's the case, then what happens to paper assets in that instance? They'll evaporate, and capital is going to move toward real tangible things that have value because they are, not because they're legislated.
You've talked to us in the past about these, first a man-made reset and then a Mother Nature reset. When you're talking about the commodities being real things, we've already got half the world in the name of the BRICS Plus already moving that direction. It's like the West is the last to the party. It reminds me of the mantras of sleazy operators on the equity market, on the stock markets, which says pump and dump or bash and stash. So when they're trash talking a company or a currency or a whatever, or a country, that's usually when they're loading up on trying to beat the using basically just a negative messages to beat the sentiment down around something so they can stock up on it because they know it's really got intrinsic value. We've seen that happening about precious metals, for example, a barbarous relic and an archaic blah, 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 no longer relevant, etc. We've also seen this pump and dump, which is keep putting out false statistics about the strength of the economy, keep putting out false statistics about employment, keep putting out false statistics about inflation, etc., saying that the economy is strong. And meanwhile, you've got countries all around the world dumping U.S. treasuries. Can you talk about that, sort of that pump and dump that's going on right now with the U.S. dollar and the U.S. treasuries?
I think that's pretty obvious that's happening. Just understand that the BRICS, Russia, China, and obviously China's having their own problems because they blew up a huge credit bubble. But they fully understand that the reason, for example, the reason gold has been trashed for years and years is to prove and point at dollar good, gold bad. And the reason that they do that is so that the U.S. Treasury continues to have the ability to borrow whatever they need to borrow to cover the deficits. And the BRICS nations know this. And I would just say, and I'm not sure if Sun Tzu actually said this or not, but the best way to win a war is without firing a shot. And I think if you go back to, Chairman Mao back in 1971 saying we now see the end of the dollar in sight when the U.S. went off the gold standard. So I think the BRICS fully understand what's going on. That it's been a charade, it's been a Potemkin village, and they're basically allowing the U.S. to spend itself into the ground and bankrupt itself, and literally let Mother Nature blow it over rather than having to go head to head. And I also believe I've said this on several interviews now. I think it's really important to go back and read Vladimir Putin's. I think he's done 6 or 7 speeches since the original invasion. Read those speeches and see if you disagree with anything that the man says, because really all he wants is free and fair settlement and does not want a NATO country on his border. And Russia was promised in 1998 that NATO would not move 1 inch toward the Russian border. And all you have to do is look at an interactive map, and you can see basically their border has been surrounded, and the U.S., NATO, flat out lied back in 1998 because the Russian border is or has been infringed upon. So I think it's important to read his speeches and understand that they absolutely know where the U.S. is. And this is, if you want to call it a reversal from the 1970s, the Soviet Union bankrupted themselves with Afghanistan. And I mean, here, the U.S. is like the Roman Empire. We're so spread out, and we've spent. I just read an article the other day. We're actually running low on ammunition, and we've spent very expensive munitions to stop, $2,000 drones.